Hi, my name is Pat O'Connor. I'm the broker owner of the Veritas Real Estate Group. We're located in Coral Springs, Florida. Today I want to talk about FHA's reverse mortgage, also called a home equity conversion mortgage or HECM. It's called a conversion mortgage because it will convert some of the equity that you have in your property into cash that is paid out to you. It's called a reverse mortgage because your loan balance will increase each month rather than decreasing. It increases because of payments to the borrower and a monthly mortgage insurance fee that the FHA always charges. So even if you take a lump sum, those fees are going to be tacked on each month. So the properties that are eligible are primary residence, 1 to 4 units, in good repair, and if it's a condominium, it has to be an FHA-approved condominium, and we don't have a lot of FHA-approved condo complexes here in South Florida for one reason or another. The borrower must be 62 or older. They have to have sufficient income in order to pay property taxes and hazard insurance. They have to not have a history of defaults on government loans. And that's about it for the borrower. How much money can they get? Depends on the equity of the home, partially based on a new appraisal. If it's a very expensive home, then the maximum appraisal value is $970,000 this year in 2022 and change. And so the appraisal value will either be the appraisal itself or that max if it's over $1 million property. So FHA will use the lower of those two values to help determine. One of the big determining factors is the age of the borrower. Everything else being equal, the older you are, the more money you're going to be entitled to because the life expectancy charts aren't in your favor. If you're 72, you're not expected to live as long as if you're 62, okay? So they can give you more money if you are older because the expectation is they won't have to pay it out for as long a period of time. Although if you're like me, I expect to be 120 plus. So one of these days, I may get a reverse mortgage and really, hit the jackpot on it. So the amount of money also depends on the type of payout that you want. You can get a lump sum, you can get a credit line, or you can get monthly payments for the rest of your life or for as long as you live in the property. And so all those will determine how much they're gonna give out. If you choose the monthly, there's no max. It'll be, okay, based on your life expectancy, this is what we're going to give you per month. But you could far exceed that if you live a long time and go past the life expectancy charts, like me. So when do you pay it off? If you sell the property, then to fair arm's length sale, you can't sell to your sister for a discounted price. Okay, so arm's length sale, meaning fair market value sale. FHA will accept, probably will accept the payoff of the loan, the proceeds from the sale as the payoff. However, when you sell, they're not required to. But you most likely can negotiate a short sale. and they cannot file a deficiency judgment against you. So if they agree to a short sale, which means that your property is worth less than the loan balance, and so the loan balance won't be entirely paid off, they can't come up after you later to try and get the difference. Okay, so that's if you sell your house. You may or may not be responsible for paying the whole thing. Depends on, the loan servicer that you're negotiating with. What if you die in the property? If you die and the heirs want to sell it, and again, it's fair market. They're not selling to uncles and all this kind of jazz. The FHA will accept the proceeds of the sale. The heirs, the estate is never responsible in an FHA loan for making up the difference between the loan balance and the sale proceeds. Okay, these are called non-recourse loans. If the if the heirs want to stay in the property, they can purchase it from the lender by either paying off the loan or paying 95% of the new appraisal value. So either one of those, and they can transfer title to the heirs. Or they can simply do a deed in lieu, give the lender the deed and walk away. Lenders can't hold them responsible. It's a non-recourse loan. And then the lenders will go ahead and sell the property. And they're not going to lose any money. That's why lenders don't mind doing FHA loans. Part of these fees that you pay go into creating a resource pool so that the FHA will actually reimburse the lenders for any losses that they incur for short sales or foreclosures, selling less than loan balances, that type of thing. So the heirs can walk away. The heirs could also not even bother to do the deed in lieu of a foreclosure and just walk away and abandon the property, and the lender will have to go through the foreclosure process. Okay, so that'll happen. Those are the four things that will, the typical things that call a loan do. However, when you sign the mortgage document, you promise to keep the home in good repair, you promise to pay the property taxes, and you promise to make the hazard insurance payments. And if you fail to do any of these, then the seller can call the loan due. If you don't do it, they can foreclose. And my understanding is one of the main reasons for foreclosures is this hazard insurance issue. So this is your homeowner's insurance. And here in South Florida, it can be very expensive. So suppose that the homeowners had paid off their mortgage, 15 years ago. These are going to be senior citizens, so that's conceivable. They've been living in a home for 15 years without a mortgage. And if you have no mortgage, then there is no state requirement that you have homeowners insurance. So a lot of people may feel, well, we have enough money in savings. If we need, if a hurricane hits, then we'll pay for the damage. What are the chances? So they may cancel their hazard insurance policy, and they may have not been making payments for 15 years. Now, all of a sudden, they're getting a reverse mortgage, and it's a new mortgage. The lenders require homeowners insurance policy. And maybe the monthly payments on this hazard insurance are really high. And they just decide to cancel it. And I guess somewhere in their brain, they may think that the lenders will never know. Well, the lenders will know. And if they don't pay, they can be foreclosed. But again, the payments could be high enough that it takes a big chunk out of their monthly mortgage payment if that's what they've chosen to get. So that's one of the reasons that they can foreclose. So that's pretty much the summation of a reverse mortgage. It can be very good, especially if you want the monthly payment and you plan to live in the house the rest of your life. One other thing I forgot to say, since we're speaking of senior citizens, if your home is vacant for more than a year due to mental or health reasons, they can call the loan due. It's got to be owner occupied. And if the owner's in a nursing home, maybe they had a bad accident and it takes more than a year for the rehab while they're gone, then the lenders can call the loan due. So keep all that in mind. Again, it can be good product. Sometimes if you have children, they're not going to like it, because instead of getting this home when you die, they now have a property that's encumbered by a loan that they have to deal with if they want the house. They have to, pay off the loan. I personally don't feel that anyone's entitled to inherit a home, but I don't have kids. So keep that in mind. If you have children, they may be upset if you choose to do this. But if you need the money and you would like to cash in on the equity in the home, talk it over with the family and make your decision. These loans can also be refinanced. So as you get older, and if the market value is increasing rapidly, you may be able to refinance and actually get a larger payout. Again, you're going to be older, so you would qualify on that basis. And if the market value is higher, then the appraisal value would also help you get more money. Okay, that's it. I will see you next week. Bye.